Salam guys. So as some of you may have noticed, oil prices and by extension the prices of oil stocks have been getting slaughtered as of late. A combination of increased production by major oil producers, Russia and Saudi Arabia, along with a complete stop in the economies of basically the entire globe, have created the perfect storm for the oil industry. Aside from all the structural long-term challenges that this industry was facing even before the most recent crisis. And you can see the effects of these challenges reflected in the prices of stocks in the oil industry. So since the beginning of this year, most stocks in this industry have lost around half of their value. Now, on the other hand, while renewable energy sources such as solar and wind gain momentum worldwide, oil is still a necessary input to basically all global economies. So the question that suggests itself now is there a buying opportunity in these oil stocks that have lost around 50% of their value since the beginning of this year? And as always on this channel, when we answer this question, we're going to follow it immediately with, do we think that investing in these types of companies is halal or not? So that is the roadmap for this video. Stay tuned. Assalamu alaikum, my name is Rakan Kayali and welcome to Practical Islamic Finance, where we try to understand financial matters and build wealth in a way that is in line with Islamic principles. If you need halal funding and you live in the United States, make sure to go to fundmebff.com. If you're looking for a halal investment to make and you earn more than $200,000 annually, go to fundmebff.com and apply to become an investor. Now, in order to figure out whether oil stocks present a good buying opportunity or not, let's try and see if we can come out with an outlook or a forecast for this industry, for the oil industry, for both the short-term and the long-term horizons. In the short term, there is a lot of pain to be felt in the oil industry. The price of a barrel of oil has dropped from the low 60s in the beginning of the year to $18 a barrel as of the date of recording this video. The impact that low oil prices has on oil extraction companies cannot be overstated. This is because when you set up the facilities to extract oil from a particular area, your costs are basically fixed. And since you're extracting oil, which is a commodity with very little differentiation, you have no control over its price. It's basically set by the market, and you have to live by whatever price the market sets for the barrel of oil that you're extracting at a fixed cost. Now, the price for extracting a barrel of oil will differ primarily based on where you're extracting it from. You can see in the following chart that the break-even price for extracting oil depends on where the oil is extracted from, as we said, and it ranges between $26 a barrel on average to around $83 a barrel on average. So below $83, you're losing money if you're extracting oil from oil sands. Below $59, you're losing money if you're a deep water oil producer, and below $26, you're losing money regardless of where you're getting the oil from. Now, at $18 a barrel, basically everyone in the industry is getting their behinds handed to them, granted at varying levels of severity. A prolonged period where the price of a barrel of oil is in the low 20s or high teens, or maybe even low teens, will mean that eventually some oil heads are going to start to roll. And it's likely that the heads with the highest debt to earnings ratios are the ones that are going to start rolling first. In fact, we've already seen the first head to roll, which was Whiting Petroleum. They ended up filing for bankruptcy on April 1st. And shareholders, common shareholders of Whiting Petroleum lost 94% of the value of their shares in Whiting Petroleum in the last 6 months. It started the year trading at $7.34 a share, and now it's trading at 34 cents a share. Still, that pain pales in comparison to long-term owners of shares in Whiting Petroleum, who in August 29th of 2014 saw the price of their shares at $370 a share. And now it's only 34 cents. Reality really does hit you hard sometimes, especially when you're up to your eyeballs in debt. There are a number of other oil heads that are candidates to start rolling. Look at Chesapeake Energy, for example. They hired lawyers that have expertise in bankruptcy in mid-March. So it's possible they might be the next body count in this crisis. It's hard to predict how long this crisis will go on for, and therefore what the body count at the end of the crisis will eventually be for oil companies. However, what I think I can say with a high degree of confidence is that there will likely be more bankruptcies unless there's aggressive external intervention by governments to support these oil companies. And what I can also say with a relatively high degree of confidence is that there will still be some oil companies standing. Now, if you're dead set on trying to pick the winners in this industry, and frankly, I am not, but if you are for whatever reason, then make sure you go with a company that has a very low debt to earnings ratio and one that has a healthy reserve of cash, so that it can weather a prolonged crisis. Because in reality, no one knows how long this crisis is going to take. No one knows how long it will take for oil prices to rebound, if they rebound at all. This brings me to the long-term outlook for oil companies. And in one word, I would describe it as bleak. Even if we put aside all of the challenges of the recent crisis, there are a number of factors that are working against demand for oil long term, and these factors include things like efficiency improvements. So, for instance, in the United States, between 2005 and 2019, the population of the United States increased by 20 million people. The number of miles traveled in a single day rose from 8 billion miles to 9 billion miles, and yet the US's consumption of oil fell. In 2005, the US consumption of oil was higher in the United States than it was in 2019. And this can be explained by the fact that the increase in population and increase in miles traveled was outweighed by increases in vehicle efficiency. Even worse for the oil industry is the fact that the loss in demand for oil, that is the result of efficiency gains, is going to be dwarfed by the destruction of demand that is caused by the transition to electric vehicles. So even though oil consumption isn't going to go to zero anytime soon, I do believe that the point of peak oil consumption will come rather quickly. That is, if we haven't already seen it. And after we reach peak oil consumption, oil production will enter into a terminal decline. Now, there may be spikes in demand on the way down, but the general direction is going to be south. This is why I believe that big money managers are divesting from the oil industry. In fact, there is a clear trend amongst these money managers to invest in sustainability. Take, for example, Larry Fink, manager of over $7 trillion in assets earlier this year, even before the crisis.
The world's largest asset manager announcing the firm will make climate change a focus of all of its investment strategy. In that letter, Fink writes, quote, "The evidence on climate risk is compelling investors to reassess core assumptions of modern finance." He also says in the near future, and sooner than most anticipate, there will be a significant reallocation of capital. Yesterday, I sat down with Larry Fink at BlackRock's headquarters right here in New York, and I asked him about the eureka moment over the past 12 months that made him decide to make this fundamental shift.
And we believe a portfolio that focuses on sustainability and climate change will be a portfolio that outperforms. So the main component of the letter is saying this is going to be a great investment over the next 10 years. and it will also help the planet.
So a summary of my economic outlook for the oil industry is that whether you look at the short term or the long term, there are more attractive risk-adjusted returns to be found elsewhere in the market. There are simply too many short-term risks and long-term structural challenges to make a compelling argument for why someone should own oil stocks right now. Now the question I want to answer about investing in oil stocks is whether or not they are halal to invest in. Now, as we mentioned, the product of oil companies is a necessary input that global economies rely on. And even while we acknowledge the necessity to move towards more sustainable sources of energy in order to save our planet, this transition is going to take many years, and in the meantime, oil is going to remain a necessary input for global economies to function. I will say the following. Many of these oil companies have quite close ties with dictatorial and murderous regimes that are responsible for the deaths and wrongful imprisonment of thousands, sometimes hundreds of thousands, and sometimes millions of people. And for those companies that are tied to these types of regimes, I absolutely do think that investing in these companies is haram. Remember the hadith of the Prophet, peace be upon him. اتقوا الظلم فإن الظلم ظلمات يوم القيامة. Beware of injustice, because injustice will cause its perpetrator extreme hardship on the Day of Judgment. This hadith is not just an admonition for those who are directly involved in perpetrating injustice, but anyone who is assisting the perpetrator of injustice. So even if you're not convinced with the generally bleak economic outlook for the oil industry, which I subscribe to, I see many of these companies up to their armpits in entanglement with oppressive regimes that propagate injustice all around the world. So I would be rather careful before I invest in any company in this sector. So in summary, whether you're looking at the economic outlook or you're looking at the halalness of investing in companies in this sector, I think that it's hard to make a compelling case for why you would be attracted to companies in this sector versus any of the other opportunities that are on the market today. Now, if you're looking for an investment that doesn't have any relation with oppressive regimes and you earn more than $200,000 annually, make sure to go to fundmebff.com and apply to become an investor. Alternatively, if you live in the United States and you're looking for halal funding, go to fundmebff.com and apply for funding. Applying is free and it won't affect your credit score. And if you're looking for a good place to buy stocks, I'm recommending M1 Finance because of its focus on long-term investing and encouraging good, healthy investment habits. If you do decide on trying M1 Finance out, it's free. Use the link in the description to support the channel. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.